Australians are already among the highest taxed workers on the planet, but a breakdown of the nation's tax data reveals that just 4% of workers contribute more than a third of the total income tax pool. And a surprising percentage of taxpayers are a drain on the nation's coffers. Tom Connell has this special report.
The recent release of the Intergenerational Report has brought the issue of income tax back into focus. If you're a worker in Australia, you are going to face a greater share of the tax burden over the next several decades if nothing changes. Let's break down why and where the money's coming from at the moment. According to the most recent data from the ANU, only 57% of Australian households are net contributors. That is, they pay more tax than they get in government benefits. The remaining 43% are either paying no tax at all or getting more benefits than tax paid. It leaves a big part of the tax revenue up to higher income earners. Only 4.1% of Australian taxpayers earn more than $180,000, but they pay 35.4% of total of our net income tax. That's after any deductions they get. Just a reminder on how much tax you're paying at present based on your income. Earn up to $18,000, no tax. It's tax-free. A lot of part-timers in that area. The rest of the rates listed are how much you pay for dollars earned in each bracket. So 18 to 45,000, 19 cents per dollar. 45,000 to 120, 37 cents. And the top rate, $180,000 plus, 45 cents. Add on the Medicare levy too for most of those brackets. Stage 3 tax cuts, these are set to kick in from July next year. There would be no more 45 to 120 bracket. It goes straight from 45 to 200 with a lower rate as well, as you can see there, of 30 cents. And the top rate, it's still 45 cents, but it kicks in at that higher rate of $200,000. How does that compare with other OECD countries? Well, Austria has a top rate of 55%, but it is only for those earning more than €1 million. That's 1.6 million Australian dollars. Our top rate, 45%, puts us equal second with France, Germany and Slovenia, but only Slovenia has a lower salary at which that applies. The others much higher. As to where our taxes go, unsurprisingly, welfare is the biggest bill, about 35%. Health, nearly 17%. Education is lower, the states tipping in more, so federal coffers 7.1% their education, and defence at 5.9%. That is a growing cost, as we know. What about how much we are taxed? Well, in the past financial year, our taxes added up to $653 billion. That's 25.7% of our national GDP. Our expenses, 25.3%. So basically a balanced budget, at least for now. And income tax has done the heavy lifting there. It's 50.5% of our total tax revenue. That's well in excess of $300 billion. And that percentage is more than every other OECD nation except Denmark. So we're high tax. The Intergenerational Report has warned with other tax bases dwindling and fewer workers to help pay for services, the share income tax will get worse. We currently have, for example, 33.2% of our population older than the working age of 65. By the 2060s, that's up to 45.4%. So our dependency on income tax will go from 50.5% now all the way up to 58.4% by the 2060s. The average personal tax rate, by the way, is going to go from 23% now to 27% by 2030. And that's with the stage 3 tax cuts already factored in. In short, unless there's more major taxation reform, the Australian government would likely to become the country taxing its workers the most in the developed world.